Oh, what's up? What's happening, members? It's your boy Liswamu 2P, and as you can see, I was already analyzing the markets. It's looking super amazing for the week because we just even had a live session here with the premium members, and we're super excited that this week is actually going to be a profitable one. Obviously, I've decided that I'm going to be sharing with you some few setups here. I want you guys to actually take a look at the dollar index, and then I'll decide what other pair or setup that I can provide for you guys so that you can be able to just capitalize during the week. At the same time, I want you guys to not use this as signals but as information that you'd be able to just see how I see the markets, how the thought process before they happen, and then afterwards you'd be able to just see them after they've happened, what actually was the thought process of that all. Make sure to just hit the subscribe button onto this YouTube channel as we speak about a lot of Forex education, and also give this video a thumbs up if you are receiving or finding a lot of valuable content from it. So let us jump onto the charts without wasting any more time. Okay, so we're starting first with the dollar index. So with the dollar index, it's almost like the same setup that we have been looking at in the past few weeks. I remember the first time, I think like the 3 weeks ago, we saw it being somewhere around here. And then we waited for that candlestick confirmation just to go to the downside. Obviously, we did break this impulsive move, this correction. The next impulse happened here. This correction happened, and then we wanted to take us all the way to the downside after this beautiful correction that played out here. So with this one here, one thing that happened is that it played out a bit, even though it did impulse to the downside. But remember, it did hit targets on the 90% rule, as you can see. So someone would say that, okay, it didn't hit target. Did hit target because this is our 90 target for this flag, this beautiful flag. Here's our 90 target here. So it went and then hit, then it retraced, went all the way to the back, to the upside. But one thing that I like about it is that price is still valid for us to still go to the downside. Like just by looking at this, obviously this was our previous lower high, then this is our most recent lower high, and this is our very most recent lower high, on which here it actually gave us beautiful double tops, which shows or confirms to us that we are still in a downward trend, because as you can see, it gave us beautiful double top. We could have still quite a saw somewhere here, but eventually it did go all the way to the downside impulsively. Then it created this beautiful correction. So this is the same pattern that I have here, just like this. It's almost like the same thing. I just moved it a bit here. So this is actually a move that I'm expecting as of Monday for price to, because it's almost like the same the picture perfect setups that we like to wait for. Because normally you'd hear me saying that, okay, we'd have maybe a trend line here and maybe a trend line somewhere here. No? Okay, let me just do this, make it be a bit clean. And then normally I would say that, okay, maybe if price is pushing upwards, let's wait for this to play out. Okay, then after the breakout, there'll be that 6 to 8 hour correction that plays out, and then we will take the sell. So this is actually the picture perfect one that we're speaking about, because take a look at this breakout that actually happened afterwards. This breakout, once it did break out impulsively, one of the most important things is to accept that a breakout broke out impulsively, then we wait at least 6 to 8 hours minimum for us to be able to put pending orders. Pending orders, as you can see, we've got here the first hour after this impulse candle. This is the first hour, second hour, third hour, fourth, 5, 6, 7. It's actually 7 hours, which now it's very, very much better for us to actually go like this. Place pending order just below here. Obviously, stop is going to be just above here, 25 pip, and maybe first target can be here, which is at 3.2 percentages. But overall, we're looking to target the structure lows here, because obviously we've got lower highs, but these were our biggest lower lows. So I wanted to basically we were looking for price to break the lower lows and then create new lower low structures. But we just placing targets on the lower lows, believing that it's gonna go and create newer lower structures. So this is actually one of the most cleanest setup that we can see on the dollar index. It helps us be able to just spot what is to be expected from the dollar, so we know what like how to actually place our trades compared to that's when you're looking at EURUSD, you know how to place, you know that the dollar is dropping, so there's a higher chances of us even looking for longs on the thing on EURUSD, because the dollar is dropping. So the dollar being the code of euro, it's dropping, which means that the base currency is obviously going to the upside. So we see it this way. Okay, so now I'm going to be starting first with our setups, the top 6 pairs. Okay, let me just answer these questions real quick. What is the other name for DXY? It's the dollar index. DXY, the other name for it is the dollar index. Okay, highly see, but is there something called the 80-20 rule in Forex pattern? Yes, there is. I'll just explain to you how it works. Okay, Ephraim, there is no other name. You'll find it or under indices or CFD. Yes, basically I don't know what, but like it's the dollar index. It's DXY, it's the dollar index. That's how it is. And for the 80-20 rule, that I just got asked now for patterns, basically what the 80-20 rules is that, like, if one thing you should be looking at structure, or the price that's happening. Yes, I'm recording this live session. The structure that's happening, you have to understand if you're in a corrective phase or if you're in an impulsive phase. You have to actually look at 80% of what the candles are saying. So let's say for instance, just take a look at this. This is, okay, let me do this. This is like just from, let's say from here. Let me start from here now. From here all the way, from here is the way where I can put this. Yes, from here all the way to, let's say, here. Okay, where's that? Oh, there we go. All the way, let's say possibly to here. Just by looking at this whole section from here all the way to here, 80% of this structure that we're seeing is impulsing. It's impulsing, it's moving to the upside massively, like it's shooting all the way to the upside. So basically 80% of the time we are impulsing. So what does it mean? It means that we are now in an impulsive phase. It means that we're in an impulsive phase. So this 80-20 rule helps you be able to spot the difference between the correction phase and also the impulsive phase. So since you'd be able to see that, okay, during this price action, during this structure here, 80% of the time we are impulsing, it means that we're in an impulsive phase. And obviously vice versa. Just by coming all the way from here, it'll help you be able to just see the difference between impulses and corrections. And just by taking a look at this whole move, this is a correction, because just by taking a look, yes, price shoots up, it shoots down, it shoots up, it shoots. There's no clear direction on this. So 80% of this move here is a correction, which now shows us that we are in a correction. And 20% obviously is an impulse. And then all the way to the downside again here, you can see that 80% of this move is just impulses. So which shows that we are basically experiencing impulse movements. So that's the 80-20 rule. And so since dollar index is dropping, USD pairs will be looking for, yes, that's how it works. That's how we actually use the dollar index. If there's a pair that includes a dollar as a code currency, there's a higher chances of that pair going to the upside, and then obviously that pair going to the upside, meaning that the dollar is dropping and the base pair is going to the upside. Obviously there's a lot of things also that play a part. There's ones that really don't get too much affected by the dollar index, because of certain reasons, because of that pair it's very strong on its own, so it doesn't really get affected by the dollar. Yes, it does affect it, but not that much. It doesn't, like for instance EURUSD. I like showing this one with EURUSD. Take a look at those. EURUSD, let me just put this one here. Okay, so one thing that I've done is that I just placed EURUSD here on the charts. Okay, I placed EURUSD on the charts. So I want you guys to see how this is getting affected. Okay, take a look at this. Here it shot to the downside, here it shot to the upside, here it corrected a bit, here it corrected a bit, shot to the downside, it shot to the upside, it started correcting here, started correcting, it shot to the upside, but here it shot to the downside. Like it's moving in the same way, though it's moving in like inversely. It's almost like a mirror, like I've placed a mirror on it, because you can see this pattern that I'm seeing here. It's here, like it's here, just by doing this, and just by doing this and this. So you can simply see that impulse, correction, impulse, and impulse, correction, impulse. Okay, so you can simply see that basically the dollar index is moving the same as EURUSD in a different way, like in a inverse way, like you're placing it on a mirror. So even okay, I'm trying to make this be a bit nice. Okay, but even here you can see it corrected a bit. This big drop to the downside, just one candle shot to the downside. It corrected a bit, one candle shot to the upside. Then it came back to all the way to the, like what it done here, and then it moved it downwards in a bit more corrective manner. It moved upwards in a bit more corrective. Then now it shot to the upside impulsively. It shot to the downside impulsively. So this phase that you're seeing here is this phase. Basically, this phase is this. It's this. Okay, you can see how it is. You can see how it is right here. And obviously, the impulse breakout here, the correction, the impulse breakout here, and the correction. So we're going up on EURUSD, but I'll show you guys now. I'll show you guys going forward, but this is how we apply the dollar index. But okay, let's see NASDAQ. Let's see NAS 100 USD. Okay, and like let's start off first with Euro USD since we just saw the dollar index now. So let's start off first with Euro USD and then we'll see Nasdaq afterwards. I'm sure. Nice, okay. There we go. So basically with Euro USD, super amazing pair. I like the fact that even on the dollar, I mean on the bigger time frame on the daily, it confirms about what we are saying. We actually saying that we're going to the upside. We're trying to look for buys on it. So even on the bigger time frame, it's giving us a lot of opportunities to confirm with us that we're going to the upside. So we need to understand that. There we go. Okay, let's wait for structure to load up a bit. There we go. Okay, so as you can see what I have here, I've got my beautiful descending structure here. And one thing that I like about this is that even a few months ago even, it played out the way that we had anticipated. But you can see my first touch is here, second touch is obviously here, and now being the third touch, it's right here. So we are now experiencing this third touch. Came down super massively, bounced on it, and then now it went to the upside. Came down low, higher low, and then now it's going all the way to the upside. So basically we're looking for price to break this higher high, creating a higher lows, and obviously let's just do this. We're looking for price to break this new recent higher high, come back, retest, go create higher highs again, maybe come back, retest, and then continue going all the way to the upside. So this is one thing that we are looking for, or we are looking at. Okay, that's on the daily time frame. As you guys can see, super amazing, looks beautiful on the daily time frame. Like the fact that it actually plays with structure. You can see third touch, multi-touch confirmation. We've got all evidence to have a bias of going to the upside. So let me just go on the 1 hour time frame. It's the same as 4 hour. There we go. So with the 1 hour time frame, basically one thing that happened is that I think it was like Friday or something, we missed an entry because yeah, we could have caught an entry, a super amazing entry, double bottom structure. Could have took an entry already, like just place the buy somewhere here. After this engulfing candlestick, place the buy. Obviously stop loss would be super minimum 29 is okay. Then currently we'll be holding maybe somewhere around the 1.2%, and obviously our first target being here 5% and going all the way to the upside. But that didn't play out. But normally you guys should notice that normally I would be saying that if structure is giving us something like a descending, and then I say we look for an entry somewhere down here, but if it doesn't give us, we wait for structure to break and then give us that correction, then we'll take this correction. That's actually what's happening now. As you can see, structure did give us the double bottom structure, double bottom formation, and then afterwards it's even in a descending type, this double bottom descending type, and now it broke out impulsively, and now it's actually correcting right here. So with this one here, it's super amazing. I want us to play around with the stop, put it here by 27 pips. Can either place the trade as soon as the market opens, or one thing that I'll do is that I'll not, or like obviously when the market opens, wait for a few minutes or an hour maximum, maybe an hour, just for the spread to cool off, to cool down. Otherwise you're gonna be in and out of the trade, and you're gonna be losing a lot of money because the spread is gonna be, it's gonna give you a lot of negatives. So with this one here, I'll show you guys on the 15-minute time frame the entry that I was able to spot. But you can simply see that once we take this buy, once it does break here, our first target is going to be here, obviously, on which it's a 4%. Amazing, like just a few pips, 112 pips can give us 4%. And guys, it can really take less than a day to go 112 pips, I promise you that. Okay, and obviously our second target is going to be somewhere here, looking to hold. Get our second target being here, maybe a 9.8%, which will be good if you secure something like a 9.8%. This is going to be amazing if you get to secure this much. But this Euro USD, guys, let me show you guys on the 15-minute time frame. I was able to make sure, one thing that I like about 15 minutes is that it helps you be able to just capitalize fully on the rewards, at the same time making sure that your risk or your stop loss is super small. That's why I like the 15-minute time frame, because you still have the same target as you would on the 1 hour, but now your stop loss is going to be super small. Okay, so you can even see what this is. Okay, impulse, let's take it from this impulse. Okay, what did I do? You can see from this impulsive move, here's our beautiful impulse. Price is giving us a beautiful correction. So obviously I have just this being a structure. So once it does break above, close above here, we can easily just take a buy and then we'll go all the way to the upside with it. So I want you guys to do that. And one thing that I like about using this platform, TradingView, you can easily do this. Come here to settings, add alert, and I'll say, okay, my condition EURUSD, obviously when the line is crossing, I can either say maybe crossing up when it's crossing to the upside, or I can say when okay, moving up, moving down, then okay, crossing down, okay, it's okay, crossing up. If I say okay, this trend line obviously, or maybe value, if you say value, it will be maybe a specific amount, but let's say trend line, and only once option, only once per bar, once per bar close. So meaning what this means is that I can put it on once per bar close. What this means is that when it does break this trend line, and then when a candlestick closes above this trend line that I have here, it's gonna alert me, man. It's gonna alert me. So okay, obviously I'll just leave those alert actions. It can notify me on the app. I've got the TradingView app, so it will notify me, send me a normal notification, like just to show me, tell me that it did cross, it closed above, so I can either place my buy manually, or if I have a buy stop, I can just go to see how it closed. And it can also maybe send me an email too. Email, then I type down my email address, send me an email. It will also send me an email telling me EURUSD has crossed your trend line, it closed above it closed above the trend line that you wanted, so it's ready to be entered. So okay, I've never seen more options what it is, but that's the message. What the message is gonna look like: EURUSD 15-minute crossing up trend line. You can see, so you can see play sound, please do sound, send email to SMS, can even get an SMS. When it crosses this, it's gonna tell me get this exact message that it closed 1, 2, 3. So you guys, this app is super amazing. This platform. But yeah, EURUSD looks beautiful. I hope you guys saw it. Looks amazing. What do you guys think? Like, let me ask you guys, what do you guys think about it? So before we move on to the next one, let's take. We just jumped into the markets and you saw me going step by step through these pairs that I shared with you. Most importantly, I hope you got or learned something from the dollar index, because the most important thing that I want you to do is to get as much information as possible from these videos. Make sure to hit the subscribe button at the same time, and also share with your friends and family, people that are interested in forex trading, because this is where you'd be able to get as much authentic information. So buy this one with 2p, and make sure to subscribe to this channel, also like the video.